Wall Street traded on an optimistic note on a Monday. Amid the empty economic calendar, investors gave priority to corporate news. Nvidia inspired optimism. The information background today is more complicated. On the plus side, consumer demand remains buoyant in the United States. That indicates resilience in the economy. On the minus side, the data may assure the Federal Reserve to go ahead with the monetary tightening. The S&P 500 and the Nasdaq have recovered from the blues of the last week and regained some of the losses. The Dow Jones closed almost flat yesterday, having inched up by 0.07%. The Nasdaq looked the best performance and added 1.05%. The S&P 500 climbed by 0.58% to close at 4,489 points. The optimism of the stock investors was smashed by stubborn growth of the US Treasury yields. Futures on the stock indexes shed 0.3 and 0.7%. The S&P is expected to trade in the intraday corridor between 4,440 and 4,510 points. The S&P 500 and the Nasdaq closed in the green on a Monday, amid a steady rally in Nvidia shares which drove the whole high-tech sector up. Nvidia shares jumped by 7.1%, the strongest intraday growth since May 25. And the reason is the inspiring forecast by Morgan Stanley, suggesting the groundbreaking potential of artificial intelligence. Nvidia remains our top pick amid a significant AI spending shift and a rather exceptional supply-demand imbalance that should persist over the next few quarters, analysts at Morgan Stanley said in a note. A rally in the chipmakers' shares sent the IT index up 1.85%, making it the strongest of the 11 S&P 500 industry indexes. Shares of other major companies also rose, including Alphabet up 1.4% and Amazon.com up 1.6%. Chipmaker Micron Technology closed 6.1% up. Nvidia, one of several tech companies that have been the beneficiaries of the AI boom, is due to release quarterly results next week. Something went wrong for Tesla, whose shares bounced off session lows but still fell by 1.2% after the electric car maker said it had cut prices in China on some versions of the Model Y. PayPal shares grew by 2.8% after the company unveiled a new CEO. As early as Tuesday, US stock index futures fell as the government bond yields hit a new high. The long-awaited report from the US Department of Commerce showed that retail sales increased and the US economy remains robust. US retail sales rose by 0.7% month-on-month, beating market forecast of a 0.4% growth. This is the fourth month of the growth in a row, which is another sign that consumer spending remains high despite elevated prices and borrowing costs. Sales in July likely got a boost from Amazon Prime Day. Sales at non-store retail chains recorded the largest increase of 1.9%. On the other hand, sales in furniture stores decreased by 1.8%. Excluding cars, gasoline, building materials and food, core retail sales climbed by 1%, whereas the market had projected a 0.3% decline. Apart from retail sales, business activity in the state of New York came as a pleasant surprise. The manufacturing PMI sharply plunged to minus 19 points in August, following a 1.1 in July, much lower than the expected minus 1 point. The index signals the first contraction in the manufacturing sector in 3 months. Despite an alarming sign, the overall picture of the US economy remains on a sound footing that is confirmed by steady rise in Treasury yields, thus putting pressure on stocks. In the corporate sector, Nvidia shares extended gains on Tuesday, climbing by 1.1% in a pre-market trading after UBS and Wells Fargo raised their share price targets. Shares of Apple, Amazon.com and Alphabet fell by 0.2% and 0.7%. Tesla shares dropped by 1.3%. After the electric car maker introduced 2 cheaper versions of the Model S sedan and Model X SUV in the United States. US-listed shares of Chinese companies JD.com and Alibaba fell by 0.6% and 0.8% after another series of disappointing economic data from China, which prompted Beijing to cut its key interest rate. Home Depot on Tuesday reported a smaller than expected drop in quarterly sales and topped profit estimates as American spending on a smaller project made up for a pause in repairs to larger homes. Leading US home improvement chain outperforms Walmart and Target later this week. Investors will also be watching Minneapolis Fed President Neil Kashkari's comments later today for more clarity on the interest rate outlook. The US dollar is not in its tip-top shape today. Following a rapid rally and retracement, the US dollar index tried today to settle above 103, but dipped to 102.9 in the New York pre-market. The index retreated today so that the euro and the pound sterling rebounded. Still, the global outlook for the greenback remains bullish. Analysts are betting on the US dollar strength in a few coming months. Growth in the US Treasury yields and upbeat economic data, including retail sales for July, differs strikingly from a mounting instability in China and other countries. This contrast benefits the US dollar. From now on, the market is anticipating the Fed's minutes. Investors will look for clues to the Fed's long-term forecast that will be unveiled at an annual conference in Jackson Hole later this month. The Canadian dollar has been affected by a fall in oil prices, and the USD CAD pair is now trading at 1.3460 with a 0.03% uptick. The intraday Canada is seen between 1.3420 and 1.3510. Despite a fall in oil prices by more than 1%, the loonie stayed afloat thanks to the statistics from Canada. Fresh inflation data cemented hopes for the next rate hike by the Bank of Canada and supported the loonie. The report revealed inflation acceleration. The annual rate increased to 3.3% in July after 2.8% in the previous months, beating the consensus of a 3% growth. Inflationary pressure was revived by a modest decline in energy prices, mainly gasoline. It's a seasonal factor. Electricity prices also rose faster. On the other hand, food prices went down, and the mortgage interest rate index posted another record year-on-year growth of 30.6% and remains the largest contributor to the headline inflation. On a monthly basis, the consumer price index grew by 0.6% in July, after a 0.1% uptick in June, and the currency market is trading in the red. Popular cryptocurrencies traded with minor dynamics in the pre-market. Bitcoin traded flat, about 29,350 points. Top altcoins such as Ethereum, Solana, Ripple, Cardano and Litecoin wavered between minus 0.17% and minus 1.2%, and the crypto market is in suspense, anticipating key decisions on the future crypto industry in the United States. Positive news from other countries makes a slight impact on the market quotes. Dubai has announced a 90% registration subside for Web3 AI companies wishing to obtain operational licenses in the city, as it aims to become a leader in the region. On the Euronext exchange, the first Bitcoin ETF has already been launched today. Notably, the market gave no response to this news. Traders are awaiting the approval of the Grayscale Bitcoin ETF. Historic court timeline suggests that a decision is likely to be made around August and may be able to cheer up traders. Until that time, Bitcoin is likely to continue trading sideways between $29,200 and $29,600. A breakout of any border could push the price at the down to 28,800 and to the landmark 30,000 and up to the moon. Keep close tabs on the global financial markets on the InstaForex TV channel. Welcome to leave your feedback. See you online tomorrow.